Welcome back to the deep dive. You ready to jump into some potentially really lucrative growth stocks for your portfolio?
Always. Let's do it.
All right. So, for today's deep dive, we're going to be checking out this super interesting article I found called
Oh, yeah.
Boostez votre portefeuille avec ces actions d'avenir, which basically means boost your portfolio with these stocks of the future.
It's a great title.
Yeah, right. And I really like that this article doesn't just look at companies that are like riding the wave of current trends. They're looking at companies that are actually creating the trends.
Right. That's where the big money is, right? Those companies who are shaping the future.
Exactly. But before we get into all the exciting companies that are, changing the world and all that,
Yeah.
let's just make sure that, we're all on the same page.
Right.
Could you maybe break down exactly what growth stocks are, especially for those listeners who might be newer to investing?
Yeah, sure. Basically, growth stocks are companies that are expected to grow at a much faster rate than their competitors.
Okay.
So we're talking about revenue, profits, share prices, all increasing.
Okay, so it's not just that they're growing.
Yeah.
It's that they're growing faster than everyone else.
Faster, yeah.
Yeah.
And what really sets them apart is that they tend to reinvest their profits right back into the business.
Okay.
So they can further that expansion in research and development.
So instead of issuing dividends like
Exactly.
more established companies, they're using that money to just grow even more.
Exactly.
Oh, interesting. So they're kind of like the ambitious startups of the stock market, always pushing the boundaries, huh?
Yeah, I like that analogy. Yeah. They're the ones taking risks, trying to be innovative and come up with the next big thing.
Exactly. And I imagine that comes with higher risk.
Oh, definitely. Growth stocks, they tend to be more volatile.
Yeah.
Especially in the short term.
Oh, okay.
You're going to see some bigger swings in their prices compared to those more stable, blue chip stocks.
So not for the faint of heart, huh?
Exactly. Got to be comfortable with a little bit of a roller coaster ride if you want to invest in growth stocks.
All right, that's a good point. It's that balance between risk and reward,
Right.
which I'm sure we'll be talking more about today.
Yeah.
So getting back to the article, this article wasn't just picking any random growth stocks.
Right.
They had some pretty strict criteria for their list. Could you maybe tell us more about that?
Yeah, sure. So first off, they only focused on companies that were listed on major U.S. exchanges,
Ah, okay.
like NASDAQ or the NYSE.
So that would be like a sign of stability already, right?
Absolutely.
Like well-established companies.
Exactly. And they also set a minimum market cap of $300 million.
So no penny stocks?
No penny stocks.
Speaking onto this list?
Absolutely.
Yeah.
They also wanted to make sure there was enough liquidity, so they required a minimum daily trading volume of 100,000 shares.
So they made sure it's easy to buy and sell the stock
Yeah.
if you, wanted to.
Right. And maybe the most important criteria, I think, is that they focused on companies with realistic growth potential.
Okay.
They weren't looking for companies that are just riding on hype or speculation. They were looking for companies with strong fundamentals.
I see. So they filtered out any companies whose valuations might be more based on hype.
Yeah, exactly. They're really trying to find those companies that have what it takes to be successful over the long term.
Companies that are built to last, not just like flash in the pan type of thing.
Right.
Okay. So I'm excited to hear about these companies.
Yeah, me too.
Are you ready to unveil the first one?
Yeah. Let's start with OppFi Inc.
OppFi Inc. Okay, I'm not familiar with them.
They trade under the ticker symbol OppFi.
OppFi. Okay. What do they do?
Well, they're a fintech company that's really making waves in the world of lending.
Oh, fintech. Okay, interesting.
Yeah. They're focused on providing credit access to a segment of the population that's often overlooked by traditional banks.
So that's interesting. So who are they targeting?
They're focused on those roughly 60 million Americans who face difficulty getting loans.
Okay.
And that's due to limited credit history or maybe other factors that traditional banks might consider risky.
So they're looking at those who are like underserved by the traditional financial institutions.
Exactly. And it's a huge market, too, estimated to be worth around $90 billion.
Wow, that's a pretty big market.
Yeah.
But how are they able to reach these customers that banks kind of shy away from?
Well, they've got this really advanced credit scoring algorithm.
Okay.
And this technology allows them to make faster and more accurate lending decisions than traditional methods.
So they're using like data
Yes.
and technology to really understand the needs and risks of the borrowers.
Right. They're looking beyond just that traditional credit score, which, can often be outdated or incomplete.
Right, yeah. It seems like a much fairer and efficient way to assess creditworthiness.
Yeah. And they've also built a strong reputation for being transparent and fair in their lending practices.
So they're not just like, right, preying on people who are desperate for loans.
No, no, they're really trying to build a sustainable business that helps people.
Okay, that's good. So they're growing this customer base. They're being transparent. They're using technology to their advantage.
hmm
How is this translating into financial results?
It's going really well.
Okay.
In 2023, they had $480 million in revenue,
Okay.
and that's a 25% growth compared to the previous year.
Wow, that's pretty impressive. And are they actually making a profit with all that revenue?
They are. They reported a net profit of $50 million for the year.
Okay, that's really good.
And their loan portfolio also grew by a significant 30%, which shows that there's strong demand for their services.
Okay. So they're growing, they're making a profit.
Yeah.
What about their financial stability? Do they have the resources to kind of...
Yeah, in a very strong position to continue this growth. They have $150 million in cash on hand
Okay.
and no long-term debt.
So they've got a really solid foundation to build on.
They do.
All right, so OppFi, definitely want to watch.
Yeah.
So let's move on to the next company. What's next on this list?
Let's talk about Tempus AI Inc.
Yeah.
They're using artificial intelligence to completely revolutionize healthcare.
AI in healthcare. I'm really interested in that. I'm always fascinated by how technology is changing medicine. So what exactly is Tempus AI doing?
Well, they're at the forefront of personalized medicine,
Okay.
which is basically tailoring treatments to the specific needs of each patient.
Oh, wow.
They do this by combining genomic sequencing, which is analyzing a patient's DNA, with clinical data.
Okay.
And they use powerful AI algorithms to analyze that data and find patterns and insights that would be impossible for humans to spot.
So they're like unlocking the secrets in our DNA using AI. That's incredible.
Yeah, it's pretty amazing technology.
But is there actually a market for this? Like, is personalized medicine actually a thing yet, or is it?
It is, and it's only going to get bigger. The market is projected to reach $175 billion by 2030.
Wow. That's a huge market. So they're definitely in the right space.
Yeah.
How are they actually making this happen? Who are they working with?
They've partnered up with over 50 pharmaceutical companies
Wow.
and over 2,000 healthcare providers.
So they're not just like
Yeah.
some small startup kind of doing their own thing.
No, they're really integrating themselves into the existing healthcare system.
Okay, so they're building this like ecosystem around this technology.
Right, which is really smart.
Okay, so they're in a great market. They've got impressive partners.
Yeah.
How are their financials looking?
Their financials are great. In 2023, they generated $600 million in revenue,
Okay.
which is a 40% jump from the year before.
Wow. 40%. That's incredible. And are they profitable?
Yes, their EBITDA was $80 million.
Okay, so they're not just growing, they're also making money.
Yeah, which is important. And they're not slowing down either. They're constantly innovating and expanding into new areas of medicine,
Like what?
like cardiology, infectious diseases, all sorts of things.
Oh, that's smart. So they're not just like a one-trick pony.
No, they're constantly trying to find new ways to apply their technology and solve more problems.
Okay, I'm liking what I'm hearing about Tempus AI. They're definitely a company to watch.
Yeah, they're doing some really exciting things.
All right, let's move on to the next company. Who else is on this list of potential winners?
Next up is Accolade Inc.
Accolade Inc. Okay, what's their story?
They're simplifying healthcare
Oh,
and
wonderful.
making it more personalized.
I think we could all use a little less confusion when it comes to healthcare. It can definitely feel overwhelming sometimes.
Absolutely. Accolade's approach is really unique. They combine technology with human expertise to create personalized healthcare solutions for people and the companies they work for.
So it's like you get the best of both worlds, the efficiency of technology and the human touch.
Exactly. They know healthcare is more than just data and algorithms. It's about people and their individual needs.
So is this like a service they provide to companies for their employees?
Yeah, they work with employers and insurers to make healthcare more streamlined and supportive for employees.
It's a really interesting approach. But is there a market for this kind of service?
The market for personalized healthcare is huge.
Yeah.
It's expected to reach $10 billion by 2030.
Wow. Okay, so they're in a good spot.
They are. And one of their biggest strengths is their customer base. They have incredibly loyal customers.
Ah, okay, so people are sticking with them, huh?
They are. They have a great reputation for delivering on their promises and providing top-notch service.
It's so important to build that kind of trust, especially in healthcare.
It is. And they do it by combining that AI and data analysis we talked about with real human support.
So they're using the technology to gather insights and make recommendations, but then they also have actual humans there to guide people through the process.
That's exactly right. It's all about making the healthcare experience as easy and stress-free as possible.
Okay, it sounds like they've got a winning formula. So let's talk numbers. How did they perform financially in 2023?
Well, in 2023, they had $400 million in revenue.
Okay.
That's a 30% increase from the previous year.
Healthy growth.
Yeah.
Yeah.
And they also added 50 new clients, which brought their total client count to 700.
So they're definitely gaining traction.
Yeah, they are.
But what about their financial stability? Can they keep this momentum going?
They're in a really strong position.
Yeah.
They have $250 million in cash
Oh, wow.
and zero long-term debt.
It's amazing to see these companies with such strong financials.
It is. It gives them a lot of flexibility to invest in their growth.
And what about their future plans? Where do they see themselves going?
Well, they're setting their sights on expanding into government and international markets.
Ah, okay, so they're thinking big.
They are. There's a lot of opportunity out there for them.
All right, Accolade, definitely a company to watch. So we have one company left on our list, and I think this one needs no introduction.
Let's talk about Meta Platforms, Inc., better known as Meta, trading under the ticker symbol META. Meta. Right. Now, Meta might seem like a familiar name,
Yeah.
but they're going through this major transformation right now,
Okay.
which makes them a really interesting growth stock. We're not just sitting back and,
Yeah.
resting on their success. They're trying to reinvent themselves for the future.
Yeah. Meta's been facing some challenges lately, but they're also a giant in the tech world with a history of innovation.
Yeah.
So I'm curious to see what their comeback strategy is.
Well, their big focus is on developing new AI-powered devices.
Okay.
And they're planning on launching those in 2025.
So they're leveraging their expertise in AI and user experience
Exactly.
to jump into this growing market for smart devices and AI-powered devices.
Exactly. And they're in a prime position to do it too.
Do they have the financial resources to pull this off, though? I know they've been spending a lot on the metaverse.
Oh, they do.
Oh,
They absolutely do. Their recent performance has been incredibly strong.
yeah.
They generated over $48.3 billion in revenue
Wow.
just in the last quarter of 2024.
There's a huge rebound. So they're not just surviving, they're thriving.
They are. And their capacity for innovation is truly unmatched. They're
Yeah.
constantly pushing the boundaries of what's possible
Yeah.
in technology.
So Meta, the comeback kid, maybe?
Maybe. Now, the article does point out that while Meta is in a strong position, the other three companies, OppFi, Tempus AI, and Accolade,
Okay.
might actually offer even faster and higher returns.
Interesting. So they're not ruling out Meta, but they're saying that these other companies might have even more potential for explosive growth.
Right.
Yeah.
And that's what makes this comparison so fascinating.
It is. We have 4 companies all operating in different sectors, all with their own unique stories and growth potential.
Exactly. It's a real mix.
It's a real dream team of growth stocks, huh?
Yeah, I like that.
But how do we even begin to compare them?
Right.
Like we've got OppFi, the fintech innovator, Tempus AI, transforming healthcare with artificial intelligence, Accolade, making healthcare easier to navigate,
Yeah.
and then Meta, the tech giant kind of staging a comeback. It's a pretty diverse mix.
It is a diverse mix.
Yeah.
And that makes comparing them tricky, right?
Yeah, definitely. So where do we even start?
Well, I think a good place to start would be to look at the size of the market each company is operating in.
Oh, okay. Market size. That makes sense.
So, for example, Tempus AI and Accolade both operate within the healthcare market.
Yeah.
And as we mentioned, that market is projected to grow significantly in the coming years.
Right. Healthcare is always going to be in demand.
Exactly.
People always need medical care. And with all the advancements in technology and aging population, the need for innovative healthcare solutions is just going to increase.
Absolutely.
It seems like a pretty safe bet.
It does.
Yeah.
What about OppFi? Their target market, that underserved credit market, seems much more niche.
Yeah, that's true. 60 million Americans in a $90 billion market is nothing to sneeze at. But
Right.
compared to the massive healthcare market, it does seem a bit smaller, right?
Yeah, it does. But remember, OppFi is addressing a very specific need within that market.
Okay.
And that focus actually allows them to tailor their products and services really effectively.
So they're not trying to be everything to everyone.
No.
They're focusing on becoming the go-to solution for this specific group of people.
Exactly. And that can be a huge advantage in such a competitive market.
Right. It's like finding your niche and really owning it. Okay, so market size is one thing, but what about growth rates? Which of these companies is growing the fastest?
Well, based on their recent performance, Tempus AI is in the lead. They had a 40% year-over-year revenue growth.
Wow.
OppFi is close behind at 25%,
Okay.
and Accolade is also showing strong growth at 30%.
So it's like a growth stock race, huh? But what about Meta? Where do they fall on this growth spectrum?
Meta has put up some impressive revenue numbers recently,
Yeah.
but their overall growth appears to be a bit slower compared to the other three. That being said, they are a much larger company.
Right, so their scale still gives them a considerable advantage. So if we're talking pure speed, Tempus AI and OppFi are leading the pack, but speed isn't everything, right?
Well, it's not. We also need to consider their competitive advantages. What sets each company apart?
Okay, let's dive into that. What makes each of these companies unique?
Well, OppFi has that proprietary credit scoring algorithm we talked about
Yeah.
that allows them to reach customers that traditional banks often miss.
So they're not just filling a gap in the market,
Right.
they're actually changing the way people access credit.
They are. And then you have Tempus AI, who are using AI and data analysis to literally personalize medicine.
I mean, it's mind-blowing that we can use AI to analyze our DNA and help doctors create custom treatment plans. It's like something out of a sci-fi movie.
I know. It really is incredible. And then there's Accolade, who are focusing on that combination of technology and human expertise to make healthcare less intimidating and more personalized.
It seems like they're striking a really good balance between efficiency and empathy, which is really important in healthcare, right?
Absolutely. But innovation isn't enough on its own.
Right. These companies also need to be financially sound to make all of their ambitious plans a reality. So let's talk about financial health.
Okay.
We already touched on their impressive revenue and profit figures, but what other financial indicators should we be looking at?
Debt levels are always a key factor to consider.
Okay.
And it's really impressive that OppFi, Accolade, and Tempus AI are all operating with zero long-term debt.
Wow, so they're not carrying any of that burden.
Nope, which gives them so much more flexibility to invest in their growth.
Okay, that's a good sign.
It is. Now, what about Meta? They've been making some big investments lately, so how's their balance sheet looking?
Yeah, they've been putting a lot of money into the metaverse, which hasn't really taken off yet.
Right. But they're still in a very strong financial position overall.
Okay.
They generate a lot of cash flow, and they have a good track record of investing wisely in new ventures.
So all in all, we have four companies that are all financially healthy,
Yes.
operating in high-growth industries,
Right.
and with unique competitive advantages.
Absolutely.
It's almost like we've handpicked the perfect portfolio.
Almost. But it's important to remember that every investment comes with risk.
That's true.
And growth stocks, in particular, can be more volatile because of that potential for rapid growth.
Right. The higher the potential reward, the higher the risk.
Exactly. So investors need to really think about their own risk tolerance and their financial goals when making investment decisions.
Okay, so you're saying some investors might be really drawn to Tempus AI's incredible growth rate and that massive market potential,
Right.
while others might be more interested in OppFi's unique market position and that strong customer loyalty they've built.
Right. And some might feel more comfortable with Meta
Yeah.
and their proven track record and those huge resources they have.
Yeah, that makes sense. There's not a one-size-fits-all approach to investing. It's
Right.
all about finding what's right for your own circumstances.
Exactly.
Okay, so we've covered a lot of ground today.
Yeah.
It's a lot to take in. So what's the main takeaway for our listeners? What should they be thinking about as they consider adding growth stocks to their own portfolios?
Well, I think the key takeaway is that growth stocks definitely offer exciting potential,
Right.
but you have to take a long-term perspective and be prepared for some volatility along the way.
So it's not a get-rich-quick scheme. It's about finding those companies that have strong fundamentals
Right.
and a clear vision for the future,
Yeah,
and then being patient and letting them execute their plans.
exactly. And don't forget about diversification.
Right. Don't put all your eggs in one basket.
Exactly. Spread your investments across multiple companies and industries
Okay.
to reduce your risk and create a more balanced portfolio.
That's great advice. We've really explored this exciting world of growth stocks today. We've delved into the stories of OppFi, Tempus AI, Accolade, and even rediscovered the potential of Meta. But I think the most important thing we've learned is that your investment choices really need to align with your risk tolerance and your financial goals.
I completely agree. It's not just about chasing the highest returns.
Right.
It's about building a portfolio that really fits your individual needs and goals.
We've definitely given our listeners a lot to think about.
We have.
Hopefully they're feeling inspired and empowered to take control of their financial futures.
That's the goal. Knowledge is power, and we've given our listeners the knowledge they need to make informed decisions.
Exactly. And as we wrap up this part of our deep dive, we want to leave you with this thought. Imagine it's 5 years from now,
Okay.
and you're looking back on your investment journey.
Hmm.
What do you want to see? What kind of investor do you want to be?
Let those questions guide you as you navigate this exciting world of investing.
Such great advice. Now, before we move on, I want to circle back to something that the article briefly mentioned but didn't really explore in depth. Risk tolerance.
Yeah, that's a really important concept. It's not just about finding the companies with the highest potential returns. It's also about understanding how much risk you're personally comfortable with.
Exactly. Because growth stocks, with all that potential for rapid growth, can also be pretty volatile.
Right.
Like their prices can go up and down much more dramatically than those of more established companies.
Oh, absolutely.
So how do you figure out your risk tolerance? Is there like a test you can take, or is it more of a gut feeling?
It's kind of a combination of both. There are online questionnaires and tools that can help you assess your risk tolerance.
Okay.
But you also need to do some honest introspection. Think about your financial goals, your time horizon, and how you typically react to market fluctuations.
So if you're someone who panics when the market takes a dip,
Yeah.
maybe a growth-heavy portfolio isn't the best fit for you.
Probably not. Now, if you're investing for the long term, like for retirement, for example, then you might be comfortable with a higher level of risk.
But if you're saving for a down payment on a house in a couple years,
Right.
you probably don't want to be taking huge risks.
Exactly. Your investment strategy needs to reflect your goals and your comfort level with the possibility of losses.
Okay, so that brings up another important question. How can investors balance that excitement and potential of growth stocks with the need for, stability and a good night's sleep?
The diversification is key. Think of your portfolio like a balanced meal.
Ah, okay, yeah.
You wouldn't just want to eat spicy food all the time, right?
No way. I like some variety on my plate.
Exactly. So just like a balanced meal, a balanced portfolio should include a mix of different asset classes.
So you're saying along with those high growth stocks,
Yeah.
you should also have some more stable investments like
Right.
bonds or maybe even real estate. Exactly. Bonds tend to be a bit less volatile than stocks and can provide some steady income. And real estate can be a good way to diversify, though it's not as liquid as stocks or bonds.
Right. It's all about finding that sweet spot between risk and reward.
Exactly. And that sweet spot is going to be different for everyone.
This has been such an incredible deep dive into the world of growth stocks. We've learned so much about OppFi, Tempus AI, Accolade, and even rediscovered the potential of Meta. But I think the most valuable takeaway today is that you need to align your investment choices with your risk tolerance and your financial goals.
I completely agree. It's not just about chasing the highest returns. It's about building a portfolio that truly fits you.
Well said. We've given our listeners a lot to chew on today.
We have.
Hopefully they're feeling inspired to take control of their financial futures.
That's what we like to hear.
And as we wrap up this first part of our deep dive, we want to leave you with one final thought. Imagine you're looking back on your investment journey 5 years from now. What do you want to see? What kind of investor do you want to be?
Let those questions guide your decisions as you explore the exciting world of investing.
That's fantastic advice. Thanks for joining us on this deep dive. Until next time, keep learning, keep growing, and keep investing in your future. It is exciting, but, let's not get ahead of ourselves.
Right.
We've got OppFi, this fintech innovator, Tempus AI, who are transforming healthcare with AI, Accolade, making healthcare easier to navigate, and then, of course, Meta,
Right.
this tech giant kind of staging a comeback. It's a pretty diverse mix.
It is. It's a lot to take in.
Yeah. So where do we even begin to compare them?
Well, there are a lot of factors to consider
Right.
when you're looking at growth stocks. You've got market size, growth rates, competitive advantages, with financial health, just to name a few.
Right.
So maybe we could start with market size. Tempus AI and Accolade both operate within the healthcare market, which, as we've said, is poised for significant growth in the coming years.
Yeah, healthcare is just one of those sectors that's always in demand. People always need medical care. And with all these advancements in technology and, an aging population, the need for innovative healthcare solutions is only going to increase. Seems like a safe bet for long-term growth, right?
It does. But what about OppFi? Their target market, that underserved credit market, seems a lot more niche. Does that limit their growth potential?
Yeah, I mean, 60 million Americans and a $90 billion market size is still pretty big.
Right.
But how does that compare to, like, the massive overall healthcare market?
Well, you're right. The healthcare market is bigger. But OppFi is addressing a really specific and significant need within that larger population.
Okay.
That focus allows them to really hone in on their products and services, and that can be a big advantage in a crowded market.
So they're not trying to be everything to everyone.
Exactly.
They're focusing on being the best solution for a specific group of people.
Right. Which makes a lot of sense.
Yeah. Okay, so market size is one thing, but what about growth rates? Which of these companies is growing the fastest?
Well, Tempus AI is definitely the front runner, with a 40% year-over-year revenue growth.
Wow.
OppFi is close behind at 25%,
Okay.
and Accolade is also growing nicely at 30%.
It's like a growth stock race.
Kind of, yeah.
Where does Medi fit in all of this? How are they doing in terms of growth?
Well, their recent revenue numbers have been very good,
Yeah.
but it seems like their overall growth might be a little slower compared to those other three. Of course, we have to keep in mind they are a much, much larger company.
Right, so that scale definitely works in their favor. Okay, so it sounds like in terms of pure speed, Tempus AI and OppFi are in the lead, but speed isn't everything, right?
No, definitely not.
Yeah.
We also have to look at their competitive advantages. What sets each of these companies apart?
Yeah, that's a good point. What makes each company unique?
Well, OppFi has that proprietary credit scoring algorithm we talked about. That gives them a huge edge because it lets them reach customers that traditional banks might not even consider.
Right, they're not just filling a gap in the market, they're changing the whole landscape of credit access.
Exactly. And then we have Tempus AI, who are leveraging AI and data analysis to personalize medicine. That's a game changer.
It really is. It's just incredible to think that AI can help analyze our DNA and help doctors develop personalized treatment plans. It seems so futuristic.
It is. It really is the future of medicine. And then there's Accolade, who are focusing on that human touch, that combination of technology and human expertise to make healthcare less stressful and more personalized.
Yeah, it's like that perfect balance between efficiency and empathy.
Exactly. But innovation isn't enough.
Right.
We need to make sure that these companies are financially sound to carry out these ambitious plans.
Right, we need to talk about their financial health. I mean, we touched on their revenue and profit figures, and they all sound great, but what else should we be looking at?
Well, one really important factor is their debt levels.
Okay.
And it's pretty amazing to see that OppFi, Accolade, and Tempus AI
Yeah.
are all operating with zero long-term debt. That gives them so much freedom to invest in their growth.
Wow, no debt burden at all.
Nope.
That's a really good sign. What about Meta? They've been making some big investments, so how's their balance sheet looking?
Meta's in a really strong financial position overall.
Okay.
They generate a lot of cash flow, and they've got a pretty good track record of investing wisely in new ventures.
So we've got 4 companies with solid financials. They're all operating in industries that are poised for growth,
Right.
and they all have unique competitive advantages.
It's true.
It's almost like we've created the perfect investment portfolio.
Almost. But, we have to be realistic. Every investment comes with risk, and growth stocks can be particularly volatile because of that potential for rapid growth.
Right. Higher potential reward, higher risk. It's the classic trade-off.
Exactly. So investors need to really carefully consider their own risk tolerance and their financial goals before making any decisions.
So you're saying that some investors might be super excited about Tempus AI and their impressive growth rate and the massive market potential there,
Yeah.
while others might be more interested in OppFi and their, unique market position and the strong customer loyalty they've built.
Right.
And then some investors might see Meta, with their track record and all of those resources, as kind of a safer bet.
Exactly. It really comes down to personal preferences and how much risk each individual is comfortable with.
It's not a one-size-fits-all approach, really.
Definitely not. It's all about finding the right fit for your individual circumstances.
Okay, so we've covered a lot of ground, a lot of information about these companies. What's the one key takeaway you want listeners to walk away with? What should they be thinking about as they consider adding growth stocks to their own portfolios?
The main thing is to remember that growth investing is a long game. It's not about getting rich quick. It's about finding those companies that you believe have the potential to grow over time and then being patient as they work towards their goals.
So it's more of a marathon than a sprint, huh?
Exactly. And Growth companies, they go through periods of volatility. Their prices can go up and down quite a bit. So you have to be prepared to ride those waves.
Right. That makes sense. But wouldn't that make growth stocks pretty risky?
Well, they can be riskier than those more established companies, but that's why it's so important to really do your research
Okay.
and make sure you're choosing companies with strong fundamentals, a solid track record, and a clear vision for the future.
So for our listeners who are interested in maybe dipping their toes into growth investing, where should they start? What are some practical things they can do?
First and foremost, I would recommend educating yourself. Learn the basics of investing and the different types of stocks. There are so many resources available online and at libraries. Once you've got a good foundation, you can start looking at individual companies. Check out their financials, their management team, their competition, their overall growth strategy. Do your homework.
It sounds like it involves a lot of research.
It does.
Yeah.
But it's worth it. Remember, knowledge is power in the investing world.
So you've done your research, you've learned about the companies. How do you actually decide which ones to invest in?
Well, that's where your personal investment goals and risk tolerance come in. If you're younger and you have a longer time horizon, you might be more comfortable with a riskier approach. Higher risk, potentially higher reward.
But if you're closer to retirement, you'd probably want to be a bit more conservative.
Right. You might want to focus on those companies that are already profitable and have a good history of paying dividends.
Okay, so there's no one right way to approach growth investing.
Definitely not.
It's all about finding that strategy that's right for you as an individual.
Exactly.
Yeah.
And you don't have to do this alone. You can always talk to a financial advisor.
Right.
They can help you develop a personalized plan.
That's a great point. We've covered so much today. From the ins and outs of growth stocks to those deep dives into OppFi, Tempus AI, Accolade, and even, rediscovering the potential of Meta.
It's been a great discussion.
I know. I'm definitely feeling inspired to take a look at my own portfolio and see if there are any changes I want to make.
That's great to hear. I always love talking about this stuff.
And for our listeners, thank you for joining us on this deep dive into growth stocks.
We hope you've learned a lot.
We hope you enjoyed it. Remember, the future of your investments really is in your hands. So do your research, make informed decisions, and don't be afraid to ask for help when you need it.
Solid advice.
Until next time, keep learning, keep growing, and keep investing in your future. It's so important to have that long-term vision.
Yeah.
It's easy to get caught up in the, day-to-day movements of the market, but it's really about where you want to be years down the line.
Exactly. It's about making those smart decisions today that are going to set you up for that future you want.
Exactly. So we've talked a lot about, these individual companies, but what about growth investing in general? What are some of the key things that listeners should keep in mind if they're thinking about maybe adding some growth stocks to their portfolios?
Well, one of the most important things is to remember that growth investing is a long game.
Okay.
It's not about trying to, get rich quick.
Right.
It's about identifying companies that you think have the potential to grow significantly over time.
Oh, okay.
And then just being patient, letting those companies execute their plans.
So it's more like a marathon than a sprint, huh?
Exactly. And you have to remember that growth companies can be volatile.
Okay.
Their stock prices can fluctuate a lot more than those of more established companies.
Right.
So you got to be prepared for those ups and downs.
Yeah. Okay. Yeah, that makes sense. But wouldn't that volatility make growth stocks super risky?
They can be riskier, yes, than more established companies, but that's why it's so important to do your research.
Yeah.
Choose companies that have those strong fundamentals,
Okay.
a solid track record, a clear vision for the future.
So for our listeners who are maybe thinking about dipping their toes into the world of growth investing, what are some practical first steps they could take?
Well, I think the first step is just education.
Okay.
Learn about the basics of investing, learn about the different types of stocks. There are so many resources available online.
Yeah.
You can go to the library. There's a ton of information out there. And once you have that solid foundation, you can start researching companies.
Okay.
You could look at their financials, their management team, who their competitors are, their overall growth strategy. Really do your due diligence.
It sounds like a lot of research.
It is, but it's so worth it.
Okay.
Remember, knowledge is power when it comes to investing.
So you've done the research, you've learned about the companies. How do you actually decide which ones to invest in?
Well, that's where you have to consider your own personal investment goals
Okay.
and your risk tolerance.
Yeah.
If you're younger, you have a longer time horizon, you might be a little more comfortable with taking on more risk,
Right.
potentially higher reward.
But if you're closer to retirement?
Right. You probably want to be a little more conservative. You might want to focus on companies that are already profitable,
Yeah.
have a history of maybe paying dividends.
So it really is a personalized approach. There's no one right answer for everyone.
No, absolutely not. It's
Yeah.
all about finding what works for you.
And remember, you don't have to do this all on your own. There are financial advisors out there who can help you.
Yeah, absolutely.
Well, we have covered so much ground today,
Mm.
from the basics of growth stocks to those deep dives into OppFi, Tempus AI, Accolade, and even, rediscovering Meta.
Yeah?
I'm feeling pretty inspired, I gotta say, to take
Uh,
a closer look at my own portfolio. So to our listeners, thank you so much for joining us on this deep dive into the exciting world of growth stocks.
yes, thank you for listening.
Remember, the future of your investments is in your hands. Do your research, make those informed decisions, and don't be afraid to seek out guidance if you need it.
Couldn't have said it better myself.
Until next time, keep learning, keep growing, and keep investing in your future.